Hello and welcome to another daily market update. My name is Ben and today we want to take a look at the Cronos chart. It's been a while since we've taken a look at the Cronos chart together, so a lot has happened. So let's not waste any time. Let's go. We are on the Market Intel website, dailymarketupdate.com. Feel free to register for free for daily Elliott-Wave updates. As I mentioned in previous videos, we cover a lot of different asset classes, crypto, stock market, NASDAQ, and many more. So take a look at it, especially for anybody who's here today. Cryptocurrencies might be really interesting. So again, if you register for free, you can get all of these updates, completely for free. And you can let me know in the comments about the different asset classes or specific coins, specific stocks that you want me to cover in future videos. We still have a few slots available, so let me know in the comments. Also, if you appreciate the free content, then please leave a like and also subscribe to the channel so you won't miss any future videos. Let's take a look at the chart. So what we can do here in our crypto section, we can select between the different cryptocurrencies, Bitcoin, Ethereum, Cronos. We get all of these updates for free if you register. But today we want to take a look at CRO or Cronos. And a lot has happened since the last time, since we've looked at Cronos. Obviously in the last few days, last few weeks, you could say, last few months, nothing has really happened in the crypto sector. Prices mainly moved sideways. Altcoins were bleeding, you could say, especially in the last few days, the altcoins suffered again. So I think it's worth to take a look at the chart, especially long-term chart and short-term chart. And it's good to start with the long-term chart, the weekly chart, because it helps us to keep perspective, right? We don't want to get lost in the smallest microstructures. So let's take a look at the overall larger time frame here. You can see that the initial rally, the initial all-time high, is interpreted as a wave one. Wave one is highlighted in blue. Then we have this very complex ABC structure with an overshooting B wave. These tend to happen in crypto, these overshooting B waves. They are not rare. Specifically in the crypto sector, they are actually quite frequent. Then we have this C wave down into the bear market lows of 2023. And then since then, I mean, the idea is that a third wave rally has started. It's not very clear yet, especially when you zoom out a little bit here. But I mean, you could say that, whatever happened here before resembles a little bit what happened here since the 2023 lows. Bear in mind, this is only the weekly view. We're going to take a look at the shorter time frame in a minute. When we look at all-time high targets, I mean, at the moment, the price is hovering around the 10-cent mark. If you take a look at the overall long-term target range, it's a mathematical projection. So it's not guaranteed that we get there, but as long as certain setups are holding, certain support levels, the idea is that the market will get there eventually. So we have an overall, let's say, minimum target for that third wave of $1.29, $1.30. That's the 161.8 Fibonacci extension, and that's typically the minimum that we want to see in a third wave. Now, the 200% extension is the next one after that, $1.59 and then $1.77. These are more extended targets. In third waves are typically the strongest waves or trends in a rally. You can get these extensions, and further extensions need to be expected, especially in the crypto sector. They often extend further than just the minimum. But of course, it can't be guaranteed. But generally, we would have to expect it. We should leave it like that. I mean, let's first see if we can break out to new all-time highs, and then we have these levels to focus on. Now let's take a look at the shorter time frame for our chart. Very interesting. Here we can see that the price has now basically touched the 78.6 retracement of our trading area. Absolutely no reaction, so I recommend to be on the side of caution here until we get a bit of a reaction there, where you could set a stop below. If we see a green candle from here, you can set stop loss maybe. But eventually, the price rallied in what would be a wave one in this interpretation. And then we have this support area, which is between 9.5 cents and 12.8 cents, between the 50% and the 78.6 retracement. Normally, a wave two should not break below that 78.6 retracement. You can see that the move down looks corrective. So we have some overlaps here. It's a three-wave structure, and that is typically an indicator of, it's a corrective pullback. At the same time, there is at the moment no evidence that this pullback is actually over. So it's worth to distinguish between the trading area, the support area. This is where a wave 2, in most cases, if you have 100 wave 2 corrections, most of these would finish in that box, which is in this case between 9.5 cents and 12.8 cents. The actual invalidation point, that's the red line. That's the 7 cent mark. And the 7 cent mark is the invalidation point that needs to be seen as separate from the trading area. So you have to make a decision where you want to set a stop below the invalidation point or below the trading area. We normally recommend to set the stop loss like 1% below the trading area's lower boundary, but it could in theory still find support a little bit lower and then still rally in the same structure, even though likelihood of that structure eventually succeeding will reduce if there is a sustained break below the 78.6 retracement. So that's the difference. The invalidation point, that's black and white invalidation. There's no wiggle room left then. So in the primary scenario, however, we would like to see the third wave rally from here, start from here. There's absolutely no sign at the moment that it started. And a critical breakout point to the upside would be the 18 cent level, but it would already be a good start if the price could turn around here and break out of this trading area to the upside, which means a break above the 12.8 cent level would be good. If we see a break below 7 cents, we have to reinterpret the chart. That's the update about Cronos. Hope you liked the update. If you did, please leave a like and also subscribe to the channel. And yeah, feel free to register completely for free on our website, dailymarketupdate.com. Thank you very much. Bye-bye.